Alright guys, so welcome to another weekly focus. And before we do the weekly focus and see what opportunities we have for next week, let's look at, say, a recap on the trades we had last week. So right here we had, say, a selling position on BTC, on Bitcoin. So I did attempt this like 3 times because the first 2 positions were just like break-evens. So we reattempted the sales if you look here, and we had like a break-even on this. And then, no, let me see, move a little bit to the 30th. So that was the 26th. So we tried selling this from, I think this was on the 26th. We didn't go through with this. We closed this at break-even. We reattempted the sales again on the 28th. It still didn't kick off, so it didn't launch, and we had like a break-even on this as well. And then I think on the 30th or on the 31st, we reattempted the sales for the 3rd time. So the first 2 were just break-evens, and we didn't take anything from there, so we just crashed on that position. And then we reattempted the sales again on BTC on the 31st. I think that was on Sunday or Monday, and we had our stops move to break-even at this point, and then we just managed the trade accordingly. We moved our stop loss to secure some profits. That was about 0.34, and we kept managing the position, secure profits like 1.24%, and then at this point we had secured like 1.9% of it, and then eventually we closed the trade at 1.9 because price just reversed and came back in. We also had another position on US2000. This was a loss, however, because I did take a buy here and it didn't stay, and I think during the NFP and stuff like that, we got stopped out on this position, and then price started moving to the upside again. But again, that's how price moves sometimes. So you can get paid on one pair just as we got paid on BTC, and you take a loss on another pair as well. It's just a game, and it's a game of numbers. You have to keep taking these positions. You have to keep going in until you get these wins compounding and everything. So for today, let's start with the DXY, and let's start on the daily time frame. So the previous weeks we've been on this bullish run, and this has been for a very long time. So we had this massive move to the upside, and when we did the market focus every time, we kept saying we're having the DXY moving to the upside, the DXY moving to the upside, and we can only switch our buyers and look for a bearish move on the DXY once this move to the upside gets violated. And eventually we had a violation of that, and price actually tested 104 right here, this psych number right here. And with the test of this number, I'm expecting prices to do 2 things. So we need to see prices fail to go past 104 first of all. Then we say we might have prices moving back to the upside, or we could have prices test 104 and just breach through that area and move to the downside. But when you move, say, to the 8-hour time frame and progressively to the 4-hour time frame, you start to understand, like, the picture becomes clearer and you're seeing things differently. So on the 8-hour time frame, it's difficult for you to say for certainty what price is really trying to do. Yes, we had this move to the upside and we had a breach to the downside, but price tested 104. And just as you know with psychological numbers, when you have a test of a psychological number, you need at least to, like, the second test of that area to know if that point is actually a holding price at that point. So you need to see a rejection at that point at least 2 times. That just tells you, all right, it's difficult for price to go past 104. So if you move set down to the 4-hour time frame, looking at this on the 4-hour time frame, I can tell you we've had prices moving to the downside. There's some sort of like a consolidation here, and we've had another massive move to the downside testing 104. We had this move to the upside giving us this rejection candle from the buyers. So I'm really expecting prices, say, to drop down to 104 one more time to have a test of this level, and then we'll probably see prices moving back to the upside. Because when you have a massive move like this on the daily time frame, you also need a massive pullback before these sales can come in again. So when we step down, say, to the hourly time frame real quick, on the hourly time frame, now this becomes really interesting, because the move we had on the 4-hour time frame, on the 8-hour time frame, and even the daily time frame, we had these sellers coming in. There was a consolidation. We had sellers coming in, testing this for the first time. So now we've breached this downtrend that was building up on the hourly time frame. And if buyers are supposed to come in, these buyers need to pull back as well. So the first area we tested again was 104. So I'm expecting prices to move and test 104 one more time. And if we see a rejection with, say, price finding it difficult to go past 104, then I'll be expecting prices to move to the upside. So my buyers coming into next week on the DXY is quite simple. I'm looking for two things to happen on the DXY. So early next week, the first thing is a move to, say, 104. I need prices to drop to 104 and test this area. And if it finds it difficult to go past this area, then I'm expecting prices to move to the upside. So the first thing is a drop. So see, say, some price action coming in from the sellers. And once this exhaustion from the sellers completes, or once the sellers complete the move to the downside to test an area like 104, I'm expecting buyers to kick in again impulsively to take out areas like this and say move up to areas like this, or even test 105. So the move going up to, say, 105 might take more time compared to a test of 104 and then price testing an area like this. So all I have to do now is just wait and see what's going to happen. So with the buyers I have on the DXY already, which is a move to the downside to test an area like 104 and then eventually test an area like this or 105, I can already move to other pairs and look for trading opportunities. So let's look at the first one, which is US30 right here. So if the DXY has to move to the downside to test 104, which is this one right here, if it has to test 104, I'm looking at a pair like US30 and we have price hovering around this area, which is a psychological number on its own, that is 39,000. So if price eventually breaks to the upside and gives me a test of this area right here, this could be an opportunity for me to take a buy to areas like this coming into next week. So I will be looking for buying opportunities to areas like this. Now the reason I'm not taking this all the way to, say, here, which is like 40,000, the reason I'm not going all the way to this area like 40,000 is because when these sales come in on the DXY, as per my buyers, I'm expecting prices to move again to the upside, and if this happens, I'm expecting sellers to step in around this point and take prices again to the downside. So coming into next week, if I take any buying opportunity on, say, US30, first I need to see prices move back into this area, test this area of 39,000, and once it's difficult for prices to go past this point, I'll look for buying opportunities and I'll probably exit around here. And again, the reason I'm not trying to extend this buys is because I understand the DXY might, say, get a rejection at 104 and we see prices moving to the upside, and if that happens, then we should expect sellers coming in from an area like this. So that's it for US30. It's quite easy and it's not really complicated, so there's not a lot I can do as of now. So looking at it again, if we find it difficult to go past this point, then my bias becomes different now, so I'll start looking for selling opportunities. But heading into next week, looking at what is happening on the DXY, we had this break and I'm expecting prices to test an area like this, stepping down to, say, US30. I'm looking for buying opportunities on this pair. That's my buyers going into next week. And it's the same thing when you look at, say, another pair like NAS100. And I like looking at US30, NAS100, the S&P500, because these pairs just correlate and it makes it very easy for me to have this directional buyers on the DXY and then just get the opposite on these other pairs. So when you look at NAS100 already, we hadn't moved above 18,000, which was a psychological number right here. And this, as compared to US30 is still below this psychological number, and for US30 I need prices to move in and have a test of this area before I look for buying opportunities. On NAS100, however, this is different because we already have prices within this area and now we have a pullback. The only problem is it's difficult for me to take buying opportunities on NAS100 because the lowest time frame I look at is, say, the hourly time frame, and it's difficult for me to fit the sellers on the hourly time frame on NAS100 as of now, because you can't really see sellers coming in right here. So all we have is just a move to the downside and we have prices holding around this point. But I know if you step down to lower time frames, say the 5-minute time frame, the 15-minute time frame, if you trade, say, lower time frames, if you're a scalper, if you do like 1 minute, 5 minute, 15 minute, then it might be easy for you to fit these sellers on a lower time frame, and you'll probably see, so you can fit this on a lower time frame, and once you confirm that the sellers have completed, then you see an opportunity for you to go long. So on NAS100, however, in as much as I'm not taking any buying opportunities on NAS100, I'm also expecting prices on NAS100 to move again to the upside. And this is interesting because NAS100 has been putting in, say, a range around this point, like so. So NAS100 has been putting in this massive range here. So if you just look at this, another way you can put yourself, say, to get a buy on NAS100 is wait for prices to move into this point, give you a test around this area, and you can still take this as a buy to areas like this, just trading it as a range. So personally, I'm not going to take an opportunity on NAS100 unless I see some price action that actually aligns with my setup or with the setup I'm looking at or the setup we look at in the community. So I'm just going to watch this, but I'm looking at, say, US30. On the other hand, this could probably give me a good buying opportunity, but with NAS100 it might be difficult for me to get in on NAS100 because my setup is not really there. But just going off of what we have on the DXY, say we're expecting prices to test 104 and then eventually move to the upside. I'm waiting to see NAS100 coming into next week, move to the upside. Now this might be great information for you. Let's say if you trade the lower time frames, 15 minute, 1 minute, 5 minute, you could probably see some buying pressure coming in and you could have a setup. But for me, the lowest time frame I look at is the hourly time frame, so it's quite difficult for me to take buying opportunities on this. So I'm waiting for NAS100 to move to the upside as well. So let's look at, say, another pair, which is the S&P500. Now this is quite interesting because with the analogy we have on the DXY, so we're expecting the DXY to drop to the downside again to 104. When you look at the S&P500, now we have the S&P500 testing, say, 5200, which is this psychological number right here. Now this is quite interesting because on US30 I'm still expecting prices to move here and have a test of this area before we look for a buying opportunity. However, on the S&P 500 this is lining up perfectly because I do trade with psychological numbers as well. So with prices breaching to the downside and then moving back to, say, within 5200 and having a test of this area already, I'm just going to make this bigger one real quick. So just as I was saying, if we get a test of this area right here one more time, I'll make this cleaner real quick. So with the S&P 500, this is lining up, as I said, really good. So we've had a test of this area and we have prices attempting to move already to the upside. Now I don't want to join the buyers here because the risk to reward might not be great for me. So for me to join these buyers coming into next week, all I want to see is, say, a test of this area right here of 5200, the psychological number. If we have a test of this area and it's difficult for prices to move again to the downside, then I'll look for buying opportunities. And just as the other pairs like the NAS100 and US30, I'm not looking to take prices all the way to this point. It might eventually get there, but coming into next week and looking at what we have on the DXY, we're expecting prices to drop to what, 104, and then this rejection, and then an impulsive move to the upside. So with the S&P 500 as well, I'm just looking at areas like this, and I'll probably exit. Now you could hold this longer if you're having a different view, a different perspective, but for me, I'm looking at the DXY, it dropped to 104, a massive move to the upside. So with the S&P, I'm looking to buy from here and maybe exit around here. So that's just going off of my analysis on the DXY, which is a drop to 104 and then a massive move to the upside. So that's it. So S&P 500, NAS100 and US30. So if you had to ask me to say rank these pairs, so the S&P 500, NAS100 and US30, so which one am I actually looking at to go in, say with a buy coming into next week? The first one is going to be the S&P 500, and this is quite easy because here I'm just using one principle, which is a psychological number, and once price goes through a psychological number and then it tests this psychological number and finds it difficult to go past it, then it tends to navigate towards the other psychological number, which is say 5,300. So knowing this already and knowing what is happening on the DXY, the S&P, for me, the S&P is the first pair I'll probably look to go in with a buy, say one more test of this area, and I'm going in with a buy on the S&P 500. The NAS100, I think this might be difficult for me because it took off already, so this might be the leading pair. And with US30, now I need prices on US30 to move back into this area, give me a test of this point, then I'll look for buying opportunities on this as well. So S&P 500 is the first, US30 is the second, and for NAS100 I'm just going to watch NAS100 to help me make decisions on the S&P 500 and US30 as well. Another pair we can look at is gold. Now this is very interesting because gold has been on this massive run. If you look at it from the daily time frame, you actually understand what has been happening on gold. This is like, this pair has been interesting because I kept waiting for these pullbacks to come in. So the best pullback we had was this pullback right here, and price held at this point, and after this the buyer stepped in again. So once we got to 2300, which was this area right here, I was expecting a deeper pullback to test an area like this so we can take buying opportunities again to the upside. Now this was difficult to happen, or this didn't happen at all, and the buyers just, like, the buying pressure on gold for the past week has been crazy. Gold is making new highs as of now, if I'm not mistaken. So the only way I can take positions on gold is to get a pullback, and if I don't get a pullback that aligns to the setup I'm looking at, then it's difficult for me. So let's say we have this piece of price action right here. If we step down to the 8-hour time frame, let's see. Okay, so I think my internet is having a problem today, but if we step down on the 8-hour time frame, how can I position myself to take, say, a buy again on gold? I need to see prices pulling back to say 2300, and then I look for a setup for me to buy gold again. But it's quite difficult for me to just get in here because it's late already. So the only way I can take a position on gold is to see a pullback to say 2300. If we get a pullback to 2300, then we'll fade these sellers coming in on lower time frames, and then we see some buying pressure again to the upside. Now if this doesn't happen on lower time frames, say, let's move say to the 4-hour real quick and see if there's anything we can pick up from the 4-hour time frame. Again, on the 4-hour time frame, all we have is this massive move from the buyers, and it's quite difficult again to go in right now. All we need to see is a pullback again to areas like this. So coming into next week, if let's say on the lower time frame, like the hourly time frame, I could get some sales on gold. Let's see, we could get some sales on gold, and let's say the DXY eventually moves to an area like 104, which is a drop to 104. We might have gold moving, say, to the upside, and then eventually it gets to that point where it's difficult for the buyers to continue their move to the upside. So looking at gold and looking at the DXY, if the DXY continues dropping to 104, we might have something like this on gold. So gold is putting in, say, this high, this is a low, this is a high, this is a low. We might see, say, a further move to the upside, giving us a high, a move to the downside, a pullback. And once there's that difficulty for price to make new highs, then we could take selling opportunities on gold to 2300. And that is if, say, prices on the DXY get to 104 and we see this impulsive move from the buyers to take prices to the upside. So if all of that has to happen on the DXY, we might get this buying pressure on gold move to the upside for some time. And once we get, say, that difficulty for gold to make new highs, I don't know, my internet is really messing up today, but once we have this difficulty for gold to make new highs on a lower time frame, like the hourly time frame, which is the lowest time frame I'm looking at, once I notice that gold is having difficulties to make, say, buying pressure to the upside, then I'll be looking for selling opportunities to test an area like 2300. Now I need to make sure this aligns perfectly with the DXY. So once the DXY gets here and is making this move to the upside, then I'll look for those sells on gold. Another important thing you need to understand is, once you have a focus or you have a bias, say, coming into next week, this might not happen, guys. So you need to be prepared for, say, the opposite. So if this doesn't happen, then I'll change my bias. I'll look at the pairs again, I'll reanalyze, and then I'll switch my bias. But coming into next week, I'm looking for this drop and then a move to the upside. Another thing is, I might be expecting a drop, say, on the DXY to an area like 104, and this doesn't happen, but we get a drop, say, to an area like this. This drop on the DXY might be little, but on pairs like US30, NAS100, S&P500, and gold, this could be an opportunity for these pairs to have, say, massive moves to the upside. And with this one, a massive move to the upside. On NAS100, it could give you a move again to the upside, and the S&P500, it could give you a move to the upside. And all these are just opportunities for you to join the buyers. NAS100, you look for buying opportunities if you have a setup there. US30 moving test, you get a buying opportunity. And on gold, you wait for those buyers to come in, and then you're looking for that point where the buyers cannot go past, and then you look now for selling opportunities if the DXY eventually decides to move again to the upside. Alright guys, so that is the focus for this week. If you found any of this interesting, don't forget to hit the like and subscribe button, and see you during the next one. Bye for now.